Alright, so in today's video, we're gonna be talking about how I passed my 50k funded accounts and then got a payout. I'm going to explain the exact strategy that I used to pass my funded account and then got a payout, and now I'm on my way to pass a 150k funded account, meaning my second funded account. With Lucid Trading, my top step account was 50k and I still have that account. So yeah, let's talk about the strategy. I wrote it down for y'all so you can literally write it in your notes or even a notebook, whatever, how you feel good, but you need to write it down so you know what I'm talking about. And then I will walk through every step of the plan so we know how to trade it, and if it actually works, then I'll show you in today's trade how it works. So today we did not take a trade. I had a trade in, but then I canceled it because I realized I was on the wrong account. Like I was paper trading on accident, whatever, right? So I switched it and then placed it on Tradable again. So that's why you see this one over here. But that's not the point. So the first thing of our plan is to find our daily bias. And with daily bias, it literally just tells us where the market is going today. And then you go on to the lower time frame to see if it aligns with that, and if you can take a trade into the direction or like daily bias is showing us. If it's not that, then you cannot be taking a trade. Let's say our daily bias is bullish for the day, right, just as you see here, and then we're coming on to the 5-minute trying to find a bearish trade. That's not gonna work. You're just gonna lose your money, and I'll show you why. Because if like 4-hour chart, 1-hour chart is bullish and you're trying to take a down trade, you're not gonna make no money. Like, yeah, you might make a money when it's tapping a fair value gap, because yeah, of course it has to come down, right? But if it's bullish, you should be taking a bullish trade on the lower time frame. If it's bearish, then take a bearish time frame. Take a bearish trade. So write that down. Bullish means bullish trade on a shorter time frame only if it aligns, right? If it's bullish and then you start seeing on 4-hour or 1-hour chart it's like breaking structure to the downside or wherever, then you can start looking to trade to the downside on a shorter time frame. But it's still the same thing. Your trades on a shorter time frame should align with your daily bias on a 1-hour and 4-hour time frame, and that's the only way you should be trading. So after daily bias is done, we go for a liquidity sweep on 104. Okay, so after daily bias is done, you found out your daily bias for the day, you want to come to 5-minute or even 15-minute chart. Look for a liquidity sweep of 1-hour, 4-hour, or session highs and lows, and I'll show you what that means too. After that, we're on the 5-minute chart for confirmation that okay, after the liquidity sweep, we're still continuing in the direction we want to take a trade to. So we look for a break of structure. That's why it says BOS, or inverse fair value gap. They both tell us the same thing, that okay, it's continuing, or we have a confirmation that we're switching direction, a trend, whatever you want to call it, right? And then for number 4, there's only 6 steps. It's so easy, but we complicate it so much because we don't follow our rules, right? So it's trading is easy only if you get the psychology part right, and that's where we get stuck at. I'll tell you right now. So number 4 is 5-minute continuation confirmation, meaning we need an EQ or fair value gap. So after the 5-minute break of structure or inverse, that tells us okay, the direction has changed, and now we look if it's continuing into the direction we want to take a trade to. So fair value gap or EQ, meaning, and you see right here, the price tapped into this, went up, and then tapped it again like 3 times, and then it's going back up. So that's a continuation confirmation that okay, we're still going up. That's literally all for continuation confirmation. And EQ, you make it with the GAN box, and I could literally show you. Look, we got an EQ too, so this trade is still going up. That's a good trade to take, and I did take it today from here, I believe, to like taking the size. Yeah, and I'll show you how I took that trade exactly. So after that, you need 1-minute confirmation for again break of structure or inverse fair value gap. meaning you go to the 1 minute chart. After everything has been done, you just want to get your last confirmation that okay, it's continuing into a direction I want to go to, right? So we go to the chart, we look for a minute break of structure or IFG, inverse fair value gap. And if you don't know these terms, then you should not be trading right now. You gotta go learn those first. And after that, just target previous draws on liquidity, fair value gap, or highs and lows. And now let's get into the trading part. I'm gonna show you exactly how all of that works. So let's find our daily buys for the day. In the morning we did not get this 4 hour break of structure, so now it's telling us it's still bullish, meaning it'll probably go up here, or as I was saying, it might come down for the fair value gap and then go up. But right now it's showing us bullish because we have this 4 hour break of structure, meaning yeah, we're switching its direction. And then 1 hour in the morning, what we saw was we got this break of structure. That was our confirmation that okay, we're going down. First it was bearish because we had this break of structure, and then market was respecting this fair value gap. But then this candle New York open, we had a break of structure for 1 hour, so we were bullish for the day. And then on the 30-minute chart, we usually do it on the 30-minute chart, but you want to mark your session highs and lows. So for on my chart, Asia session open up at 18, and then London opens up at 3. And if you're on New York time, or you got your time set up to New York, then this is exactly how you're gonna do it. You want to mark out your session highs and lows. We got this high for Asia, we got this low, then we got this low for London, and then we got this high. It should be here. There you go. Oh, and also for 1 hour chart and 4 hour chart, we're supposed to be marking highs and lows. And then yeah, usually it's the same. You see like 1 hour low is same as London session low. And then yeah, even with the 4 hour, it's usually the same thing, but we still want to go check it out. Now we're done with that part. We want to go to the 5-minute chart and see if we get a liquidity sweep. And just like that, we do get a liquidity sweep, but it was to the upside in today's trade. And that means two things. It could go down, target these lows, or it could just continue up like it did today. And the way we confirm that if it's continuing up or down, we wait for the first 1 hour candle to close, because that tells us everything. If that candle went up all the way here, taking out these highs, and then came down, okay, we was bearish for the day, because we was respecting this fair value gap again, and then going low for potentially these lows, right? But no, we had a break of structure, so we know we're bullish for the day, and this sweep doesn't really mean nothing. We're still continuing up. Now we come to our confluence part. We look for a 5-minute break of structure, which we get here. So our first confluence, well, you could check that out. We're done, right? And I'm just trying to show you how this strategy plays out, and it actually works. I don't want to give you the strategy and then it's not working. Our second confluence is look for a 5-minute fair value gap, or EQ. Let me remove all these lines so you actually get what I mean. Hold up, it's gonna delete our thing. Yeah, let me just copy this first. Okay, there you go. Now let's remove everything, put the text back, and there you go. Okay, so we get a 5-minute break of structure, right? Then we gotta look for EQ, or 5-minute fair value gap. It's a fair value gap here, and I know a lot of y'all gonna say that the fair value gap is not valid because in inverse state. That's why we have our second confluence, which is EQ. So you go from the lowest point to the highest point made at that time. We don't care about this because at that moment when we was trading, this wasn't here, only this was. And as you can see, EQ gets respected. It goes up, comes back down. EQ get respected again, and then it's going back up. That's all we need. After EQ was hit, all I needed to do was go to the 1 minute chart after this shit, after EQ is hit, and yeah, place a trade after this break of structure, and we was good. And that's literally, let me show you. After here, we enter our trade right about here. Putting our stop loss at previous lows, meaning you could put it here or even here if you want to be more safe. And then you put your take profit at previous highs, meaning you could put it at this high right over here. And if you're like confused, you don't know which high to use because there's so many on a shorter time frame, let me tell you this: go to the 1 hour and boom, that's it. Mark your high, and that's where you should be putting your take profit. And you could have gone for this one too because it's literally going there right now. But yeah, that's about it for the strategy. It helped me pass my 50K account, got a payout of like $1,000 whatever. Yeah, that's about it. And I just showed you a real life example using everything that I wrote. Daily bias, we checked that out. We was bullish. Liquidity sweep, 1 hour, 4 hour, or session highs and lows. We got that, but then it wanted to continue up, so we was still bullish for the day. 5 minute confirmation, break of structure, or inverse fair value gap. We got this right here. 5 minute continuation, EQ or fair value gap. Fair value gap was not valid, but we have a EQ which got hit, and then it goes up. 1 minute confirmation, break of structure, or inverse. We got that here. Target previous draws on liquidity, fair value gap, or highs and lows. Target previous draws on liquidity. I put draws wrong, I know that. Up target previous draws on liquidity, fair value gap, highs or lows, depending on which direction you're going to. So we was targeting this high, and then yeah, it was a good trade for the day, and I'll see you in the next one.